Hey guys, and welcome back to the wrap up for the 27th of March 2020. Let's take a look at the SPY here first. Another wild week. We actually had a sell off early in the week, and then we had a bounce kind of later in the week. So we had this gap down. Then they talked about stimulus bills and how they were going to pass those, and we rallied into the end of the week here, with today being this kind of little doji type action. So until proven otherwise, this is just a bounce in a bear market. For people who haven't traded bear markets before, note that the bounces are immense. I read a study that it's on average about 10 to 15% is a standard bounce in a bear market. So, certainly don't say, okay, the bottom's in because we bounced a bunch. Wait for some sort of a confirmation, maybe a pullback lower here, and then continuation higher, holding for a while and then a continuation higher. We are not technically out of the woods yet. V bottoms do happen. They are fairly rare, but they do happen. So it could be. I don't want to say that this isn't the bottom, but I certainly wouldn't be going all in on the long side here, thinking that was it. It was all done. We need to know more. We need to, I think really the way to track what the bottom of this market will be to track the infection rates in the US, see if they start to slow or decrease or stop altogether. But until then, just keep trading price action the way you normally would. So, again, for me, until it's proven otherwise, this is a bounce in a bear market, and that's how I'm going to treat it, and I'm going to go forward. So we started last week. We took this kind of week off our swing trading entirely. We started back with this particular swing trading strategy this week. And again, if anyone is new here, basically what I do is I use trade ideas, which if you're interested, link is in the description below. Full disclosure, that's an affiliate link, so that will help out the channel. But basically what I do is I use their backtester, and I backtest a couple candlestick setups that I watch very closely and find that, hopefully they have a little bit more than a 50, say 55 or so % win ratio. Then I take that list of everything that was generated today, I narrow it down, I scan it by eye, I plug it into the system and let it auto trade for me throughout the week. I close it on Friday and I do it again. And I've been doing this for about a year and a half now. It's been a very good kind of hands-off strategy. It's one of the things that I do here. You can go on the channel, you can see discretionary swing trading, you can see intraday live trading with algorithms, which is what I do a lot of, as well as me teaching traders. Currently, it's my fiance who's kind of locked at home with me right now and is interested about what I do all day. It's a really cool series. It's becoming one of my favorites, so definitely check that out as well. So last week, we usually do 4 longs and 4 shorts, but during this market, I've decided to kind of tighten it up and do 2 longs and 2 shorts. One is because it's very hard to find swing trades that are viable in this market, and then the other is just the volatility of everything out there. So I've decreased the size of which I've traded, I decreased the amount of which I trade, knowing that the volatility is high enough that the profit should equal out. And that's what you want to do in trading, is you want consistency over all else. Okay, so last week was about flat. You can see here I made about $5 per share. So we go over here to our spreadsheet, and this kind of shows us the P&L from the beginning of the year, give or take, when we started. And the blue lines for 100 shares, 200, 300, 400, 500, depending on your size or any difference between any of that as well. This is kind of what it would be. We've only had one down week so far, and I just want to tell everyone it will not continue like that. There's no way we're going to keep up this pattern throughout. It's just not. I know for certain, based off my win rates, that there are going to be series of pullbacks and periods, maybe months, where the strategy moves sideways, but that's fine. That's just trading, and that's how it works. So this week was pretty much nothing, right? I put $5 down, but it was with slippage and commission and everything, just call it zero essentially. So what we did is we got our CHD, which we were looking for to break down from here. It did, and we got a little profit out of that. IP, we were looking for a continuation. It did that as well. We had 3 days of profit, and then it kind of gapped up and took that from us. AAWW, we were looking for this to break up. We had that, and then it came back down, right? A lot of choppiness you can see here. And TRIP was kind of the trade, I think, of this week, where we were looking for a bounce here, a little oversold bounce, and we got that, and it actually held higher. So this week I'm looking at another 4, not another 8. One is THS. Essentially what I'm looking at here is kind of a bear flag. So we had, or bull flag, sorry. We had this push up off the bottom, and then you can see I've marked these descending lows that are happening here. So I think if we break up over this, it's a potential that we're going to continue a little bit higher. PTON, Peloton, they make those cycles with the iPad strapped to it and charge you $1 million for it. And this is an interesting one. What's interesting to note here as well is the AI has done pretty good with a couple good trades here, one bad trade here, one bad trade here. But the reason I'm trading it is kind of a cup and handle, right? So we've had this big strong push up, and then it came back down to fill this gap here and held higher, and it looks like it might be coiling back up to push higher. So keeping that in mind, I'm going to watch this for a break over here, and we're going to continue and look at this short float here of a 56% short. That's pretty insane. Blue Apron took this big spike up because everyone thought everyone's going to have food delivered and it's going to change the world. And then it's come back down. It's been kind of basing. To be honest, you may be able to play this either way, say above $13.50 and below about $10. I'm looking at this below $10. I just think it could pull back to 8 or 7 and still be, healthier than it was down here and still holding this breakout point in the gap, right? Filling the gap and then pushing higher is certainly possible. But if we fill the gap first, then we've got $7.64 area to fill the gap. So that would be a pretty good one. And last but not least is CHRW, just your typical bear flag. So this thing sold off and it bounced and it's just been kind of chopping sideways. So I think if it continues, we could have a little push here under 60. I haven't talked about Bitcoin in a while, but I get some requests too. So I will show you what I'm looking at with Bitcoin. Again, I'm not a hodler. I'm not one of those guys who think it's going to be $1 trillion a share. It could be zero. I'm kind of in the middle, but what it is a wicked trading instrument. So as long as it is, I'm going to keep trading it. What I'm seeing right now is that we've had this area in through here, which was where we bounced before. We sold off dramatically out of it, and then we've bounced back up into it. So this is showing down here on the bottom is basically showing where the Bollinger Bands are really, really tight, and when they're really, really wide. And you can see we're coming back to tight here. What I've noticed a lot with Bitcoin is essentially, there's no magic to a Bollinger Band, but it just means that price is compressing here, and then when it moves, you get these giant explosive moves. It happens all the time in Bitcoin. It's very rare to see this stay depressed for a long period of time. So I think we're gonna maybe push down, have this a little bit depressed. But basically, what I'm doing is I'm looking at it and say, okay, if we break over 7,000, maybe we take another run at 9 or 10 and see if we can kind of recapture this area. If we fail here, maybe we look at 4. But basically looking at it and saying Doji, Hammer, Doji, a lot of indecision. Basically a battle is going on. If we go to the 4-hour chart, you can see it a little bit tighter, where every time it comes up and it hits a 6,800, someone sells it down, and then it broke through 6,800, someone sells it down. So there's a big battle going on in this area. If this battle resolves either to the upside, I'll try to take an upside scalp, or if it resolves to the downside, I'll take a downside longer term position. And the reason that I would do that is just because the trend currently is down, right? So if I'm going to stay with the trend, then I should be looking for shorts into rallies. And then when the trend kind of holds and reverses, maybe it chops around here for a bit and pushes higher, then I will continue that on the long side. So that is what I'm looking at for this week. Again, I'm glad this strategy is not exploding during this period of time. There is certainly some potential for some great trades here. I'm taking things easy. I'm focusing just a little bit more of my attention on the day trading side of things, because that was almost a dead game kind of for a while. There was still, certainly money to be made day trading, but it was a lot less than it was in the past. And that's been kind of revived in a big way. So I'm going to focus there. And then if it starts to die off again, I'll focus more on the swing side. So, don't classify yourself as a day trader and don't classify yourself as a swing trader. Just classify yourself as a trader. If it's going to take a month to get a 10% return, fine. If it's going to take a day to get a 10% return, fine. If it's going to take an hour to get a 10% return, that's fine. Who cares, as long as the money and the equity curve is going in the right direction. So be safe out there, guys. It's insane. It's probably going to continue to be insane. Be healthy. Be safe. And on Tuesday, you should see the next Back to Basic video.